All right. Afternoon, everybody. Thank you all for joining us today. I know we're about a minute before 3 Eastern, 2 Central. As I say that, the clock turns over to right on the hour. So we're recording this. So if anybody joins late, we'll just upload it to YouTube afterwards so everybody can catch this webinar. But thank you for joining us today. Welcome to the HMDA Made Easy webinar with West Beibers, our fearless leader over here at the Commonwealth Group. This time of year we get constant questions in our inbox about HMDA and, you know, audit hotspots and practical solutions for lenders to help them properly file their HMDA and properly prepare for audits and everything like that. And we thought it'd be a good idea to put together a webinar for everybody. So here we are today. And as I mentioned before, it's going to be led by West Beibers here. And for those of you guys that don't know us, we're the Commonwealth Group. We're known for our contract underwriting and processing and quality control and conduct project reviews, but we also have an excellent consulting department as well that handles items like policies and procedures and QC plans and HMDA audits, and we help people with their HUD approvals, pretty much anything under the sun. But it's all led here by Wes Beibers, our president here, and he's held probably every job you can hold in the mortgage industry. You got about 35 years worth of experience from a humble clerical start all the way to the CEO title and everything in between. So with that, I'm going to turn it over to Wes. Excited to hear what you have for us today.
Oh, thanks so much, Martin. And like Martin said, I think I've held just about every job in the mortgage industry you can have, and I guess it's kind of a bad sign, but I think I'm not sure how good I was at them all. But anyway, but been around the business for a long time. So anyway, thank you, Martin, for setting all of this up. Today we're going to take a look at some HMDA requirements, and HMDA is one of those things that's out there that can really get you in trouble if you don't do it right. And it's that time of year. We're coming to the end of 2025, and so consequently, HMDA is fast approaching. And the HMDA deadline is March 1st, and we're going to talk a little bit more about that. But what we're going to be looking at today is basically the basic requirements of HMDA and how to avoid problems on your annual reporting. We do a lot of, and by the way, there's that handsome devil in case you ever need something for your garden to put out to scare off the crows. There you go. But I won't spend any time on that. The better that we move on from that, I think we'll all benefit. But what we're going to be taking a look at today are who has to report, when they have to report, and what all is involved in the report, and how to have a successful report. Because HMDA is one of those things that the federal government takes very seriously. And we're going to be taking a look at that. So one of the questions that we get from a lot of lenders is, do I have to report to HMDA? And the answer is generally yes. And there's very few exceptions on this, but everyone is generally required to report their HMDA data to their regulator no later than March 1st of each year. So we're coming up at the end of the year, and this is a great time to take a look at it. Make sure you're ready for reporting, because once we hit January 1st, the portal's open, and you have until March 1st to report your data. Now, again, who is required to report? We're going to talk a little bit about that right now. If a financial institution does not have a location inside a metropolitan statistical area, and it did not originate 25 mortgage loans in each of the prior 2 calendar years, it is exempt from reporting for that year. So for those of you who are on the call, it may be your institution is smaller and you are not located in an MSA and you did not originate more than 25 mortgage loans in each of the prior 2 calendar years, you're exempt at that point. However, I dare say the majority of people that we have on the call today and most of the lenders that we work with, their office is located in an MSA and they're originating 25 or more loans a year. Simply put, that's only 2 files a month if you average it out. So it doesn't take long to get there on it. So there's very few people out there that are active in the mortgage markets that are exempt on this. Now, one of the things I always tell people, if you think your organization might be exempt, you need to seek legal counsel and have them review your situation. And one of the things that happens sometimes is people will be exempt in a particular year, and then the next year, all of a sudden, they're over 25, over 25 units in an MSA. Well, they have to report. So if you're hanging around that 25 mark, you probably want to check with somebody just to be sure you're not having a problem. And you can do that with us. You can do that with a legal counsel, or you can contact us as well, and we'll help you with that. Now, the one thing I will mention about HMDA reporting, if you report HMDA data and you weren't required to, it will not hurt you. It will not hurt you. So, big thing to remember on that is just because you do report and maybe you weren't required to, again, not going to be a problem. But if you are required to report, you want to be sure that you do it, because the penalties for non-reporting are pretty drastic. But again, we always recommend to seek legal counsel if you're going to verify exemption, or contact somebody like us who's involved with this all the time. Now, again, institutions may be exempt one year and not exempt the next. So it changes. Now, again, exercise caution if you're claiming exemption, because these rules change pretty often on this. But in general, if you're doing more than 25 loans a year inside of an MSA, you're pretty much required to report on that. All right. Now, we talked about the importance of reporting. Now let's talk about what can happen to you if you are supposed to report and you don't report on this. First of all, the CFPB, everybody's favorite government institution, they can impose a penalty of up to $10,000 per day for late filings. It can happen. And so this is something that they don't mess around with. Now, I will go ahead and tell you, this is going back a ways. This is back pre-CFPB, when we reported, the institution that I worked for, we reported to Federal Reserve Bank. They were our regulator. Everything has moved over to CFPB now. But one day I got a call from them that said, hey, we don't have your HMDA report. And this was like early April, something like that. And after I kind of quit hyperventilating, they said, relax, just send it over to us. No problem. These things happen. The bottom line, what I'm saying is, they're not necessarily itching to penalize you. They want the data, is the point. However, regular noncompliance, they're going to penalize you. And that penalty can be up to $10,000 per day for late filings. So at the end of 30 days, let's say that you had a habit of not filing on time. All right, well, if I'm not mistaken, I believe that's $300,000. It can add up pretty quick. This is, again, something you do not want to ignore. You want to be on top of this. Now, again, inaccurate filings, that's another issue. These can result in the institution having to go back and refile. Now, one thing I will say about inaccurate filings, again, I think we've probably all heard the expression, the process is the punishment. You may have heard something like that. Well, that definitely applies to this sort of thing. They want the data and they want it to be right. But if you don't make it right, or you don't comply, they can make it very hard on you. And the error rate is pretty tight. In other words, there's not a lot of leeway. So error rate on fields, now there's a number of fields inside the HMDA report. If you have an error rate on fields that exceeds 10% of the files, they're going to require a complete resubmission of the specified year, along with an audit of the prior year's findings. Okay, well, you notice there's no monetary penalty there. Well, there's not. But again, the process is the punishment. There's a lot of work that goes into these. Error rates of 10% require resubmission of the affected years. Less than 5% just require resubmission with error corrections. So this is one of the reasons that we say this time of year and early next year, it's a good idea to get an audit on your HMDA to see, are you having errors? Because the thing about it is, I always say this, once you submit it, it's gone. You can't get it back. You can't bring it back. So if you submit a file with errors to the CFPB through your HMDA reporting, if you do that, guess what? There's no takebacks. You can't take the report back and make a correction. Once you've let it go, you've let it go at that point. So be very careful of this. And this is, again, why we always recommend doing at least a spot audit on your submissions. Make sure you don't have any problems before you submit it in. You can make all kinds of corrections before you submit it. But once it's gone, it's gone. Now, again, they're not so much looking to fine you as much as they are looking to have the data. They just want correct data. Now, again, though, continued errors in submission, it can result in very large fines on that. Here's a couple of civil money penalties that we've seen in the last few years. Some of you may be familiar with some of these. Washington Federal Bank, which is out of Washington State, for a second offense, and that second offense was basically incorrect submission. They got hit with a $200,000 fine in addition to having to resubmit. That's not mentioned on there. Freedom Mortgage, $1.75 million. Mortgage Master out of Massachusetts, $425,000. Nation Star out of Texas, $1.75 million. Okay, in all of these cases, institutions had to go back and resubmit the HMDA data. The numbers of years for resubmission required varied from 3 to 5 years. But that was in addition to the civil money penalty. This is not something you want to mess around with, folks. You want it to be right. And I will tell you, in each of these cases, for each of these institutions, it was a case where they didn't go straight to civil money penalty. They told them to get things correct and they didn't clean it up. So the whole point of it is a little extra time on the front end can save you lots of money and lots of grief on the back end, because HMDA errors can be costly. And this is one of the few things on the government programs or the government requirements where they've got some real teeth in it. You know, they want this data and they want it to be accurate. And that's why it's why the way it is. So be aware of this. Again, HMDA errors, and it's one of those things I always say, gosh, you know, talk about flushing money. This really is. All right, now, while each of the cases are different, while all HMDA error cases are different, if you take a look at these, there were some common error findings on these. Number one was weak or non-existent compliance management systems, CMS, lack of policies, procedures, and internal control. Now, I want to say something about this. This is related not so much just to HMDA, but for everything across the board. Whenever I say, do you have a compliance management system or a CMS? When we do an internal audit or anything like that, that's one of the questions that we ask. And almost inevitably, there will be somebody that we'll be talking to. They'll point at a computer. Well, a CMS is not a computer system. It's your policies, procedures, and internal controls. Now, let me just say, if you have not got a complete written policy manual, procedures, or have an internal control or on this going on, you're going to have a problem with a regulator at some point or another. We were speaking to someone this morning. Actually, this is a conversation we have regularly with people when we talk about policies and procedures or your compliance management. The thing about it is, the only thing worse than not having a policy or procedure is having one that you don't follow. Because the logic is, okay, we started, we had this and it says we do something, but you're not doing it. Then the regulator's point is, well, what else are you not doing? And the audit tends to go downhill from there. But in all the cases for the HMDA, generally it was found there was weak or non-existent compliance management systems. So again, lack of policies, procedures, internal controls, that sort of thing. There was also a compliance issue, and this is lack of regular compliance auditing and HMDA testing. So you had people who were sending things in, they really weren't looking at it, they were just sending it in. And they weren't checking for accuracy. This is why we always tell people, before you submit, before you do that, do a complete, or maybe not a complete audit, at least a spot check audit on your HMDA submissions to be sure that you've got what is needed. And I will tell you that a lot of times when we're doing these spot audits for lenders, sometimes we find things where it's just, maybe there's going to be maybe an issue here or two, but sometimes we find things where it's like, holy cow, you didn't even look at it, did you? And the whole point I'm making on this is, remember, on a HMDA audit, you're only allowed, 5 to 10% errors based on the fields. So there's not a lot of leeway on these. So be very careful with this. I highly recommend, whether you do it internally within your organization or whether you do it externally, working through a group like us, the Commonwealth group, please carry out some type of audit on your HMDA findings on that before you submit, because again, once you submit, it's gone. Can't bring it back on that. So keep that in mind. Finally, operating policies and training procedures. Again, weak or non-existent operating policies and training on policies. Again, this is, depending on the company, this can be an issue. You know, you might have great policies and procedures, but if people aren't carrying it out or they don't know how to do it, it's a problem. It's a problem. So these were three of the more common bullet points in the items where people were getting fined. Again, weak or non-existent CMS, compliance, or weak operating policies and training. It doesn't do you any good to have the greatest manual ever if your people aren't following it or they don't know how to follow it. So those things are all very important, and these are the commonalities that we see. All right, when we talk about HMDA data, when we start getting into what's, what is it? This is one of these things where, oh, how can I put it? You can more or less do what you want to do as long as you are consistent. Now, it used to be for a long time that the regulators said, you've got to report on your files, but they really didn't give you any guidance on what a file was. Well, we finally got that, and pretty much the minimum standard is any loan which is triggered that you have the 6 application items. That file must be dispositioned in accordance with company policies and procedures, and that becomes a HMDA reportable event. There's a lot of times that Curtis and I are out there conducting audit, and you'll hear us use the term, it's a HMDA reportable event, or it's not a HMDA reportable event. But at a minimum, you want to make sure that your policies reference this, and that at the very least it states that a loan application is made up of occurs when you have the 6 trigger items, when you would normally disclose an LE at that point. That becomes a reportable file. And once it becomes a reportable file, you have to disposition that file. Now, the reason this is important is I know a lot of you are involved in purchase mortgages, and somebody comes into you and says, hey, I'm thinking about buying a house, but I don't have a contract yet. Can you tell me how much I qualify for? Okay. You may have everything, but you don't have that last item, which is you don't know the property address. Then let's say that the borrower, doesn't decide to go through with it, whatever it happens to be, but you never had a property address. That is not considered an application unless your policies state that it is. But most people are going to follow the CFPB guidance, which says a loan application has to have the 6 items. Now, if you don't have the 6 items, that's not a loan as far as HMDA is concerned. Now, you do have Reg B issues that you have to contend with. But like I said, the big item here is if you have the 6 trigger items and you've disclosed an LE, you now have a loan application, and you have to disclose that loan application into the HMDA system. Okay? Easy enough. And remember, whatever you have an application on, you have to disposition that file one way or another. Now, if you look at the disposition options, with a very few exceptions, and which I'm not going to jump into today, they're so rare. Generally, the dispositions are loan originated, loan denied, withdrawn, closed incomplete, or approved not accepted. Okay. Now, obviously, we all want to originate the loan. That's where the loan is approved and the loan goes to closing. The loan closes, disperses, everybody makes money, everybody's happy at that point. That's the one that we all want. Now, the thing about it is, when you have an originated loan, it's pretty obvious what's going on. Okay, the loan was originated. You made the loan. Okay, where it gets a little tricky is in the adverse area, and the adverse is everything else: denied, withdrawn, incomplete, approved, not accepted. Now, if you take a loan application and for some reason, maybe the credit is not good, or Maybe the appraisal comes in low. Whatever it happens to be, you may very well have a denial at that point. But you have got a disposition. The loan was denied. On the other hand, sometimes borrowers will just sort of, disappear into the ether, never to be seen again. When that occurs, that is where you would have a loan that is closed for incompleteness. Now, one thing I want to say about this, whenever we're doing any type of audit, one of we don't worry too much about the originated files. Everybody pretty much gets that right, unless there's just a geocoding error or some kind of keystroke error. The errors in that area are very rare. Where we see errors are in the adversely affected files. Now, if you take nothing else away from this meeting today, I'd like for you to take this away. Who initiates the action determines what your category is. The first one that I mentioned here is a loan that's denied. That is a lender-initiated action. Borrower lost their job. Borrower's credit was not acceptable. Low appraisal. Whatever the reason is, that is a denial on that file. That is a lender-initiated action. Now, the big thing is there's more to it than just that, because if you deny the loan, say, for unacceptable credit, one of the things the regulator is going to do is they're going to look at your denial form that you sent to the consumer, and they're going to look to see, well, they, according to HMDA, it was due to, bad credit. But looking at this, there's no issues with the credit, and you told the borrower that the loan was denied due to excessive obligation to income. That's an error. You have to be consistent throughout the situation. Excuse me, I have hiccups. Pardon me. All right. So when a loan is denied, that is a lender-initiated action. And the big thing there is you want to be sure that you report what you're giving to the consumer. If you tell the consumer the loan was denied for excessive obligation for income, you want to make sure that that's what's reporting through to HMDA. And by the way, you have multiple reasons to deny. Maybe it was unacceptable appraisal and excessive obligation. Well, there's two reasons. You have to report both of those. But a denial is a lender-initiated action. I think we would all agree with that. Okay. Then we have a loan withdrawn. This is where the borrower contacts you and says, hey, I've been thinking about it. I don't want to do this deal. Kill my account. All right. So the loan gets withdrawn. It happens. Never a fun situation for a lender. But that is a borrower-initiated action. And this is why I said if you take nothing else away today, take this. Because the loan is withdrawn, that's a borrower-initiated action. You've got to have a letter or some other type of documentation in the file that says, please stop processing my loan. That is a borrower's choice. Now, there's several different ways to do this. I'm not going to get into all the technical on this, but you've got to have something where the borrower is saying, I'm not doing this anymore. Close my account. Okay, that is a withdrawn file. Okay. Next is a loan closed for incompleteness. Now, a loan that's incomplete is a lender-initiated action. And if I had to make a generalization, the difference between loan withdrawals and loans that are closed for incompleteness, we take a look at that. How many is that happening on? So an incomplete file is going to be one where, and we've all had it, where the borrower just disappears into the ether. It happens. It drives us all crazy. But, everything's going along and then they just disappear on you. We've all been there. You can't get them on the phone, can't get them by email, kind of thing. Well, we've still got to disposition that file, and that would be a loan closed out for incompleteness on that. Now, one little warning on this. One of the things that the regulators are looking at is how long did you give that borrower to work the file? If your standard policy says we're going to close incomplete after 90 days, that's fine, but you have to be consistent. And loan officers as a group, I know that they're like, oh no, I'm trying to work with them. They're looking for a house and well, we haven't heard anything from them. You've got to set whatever your incomplete date is and then stick with it, kind of thing. Whether it's 90 days, 60 days, 120, doesn't matter. You can choose. at which point you say, we're going to close for incompleteness. But when you do, you pretty much have to be consistent with that across the board. That can lead to some problems if you don't. Okay. And finally, we have approved not accepted. This is the one that's probably the least. This is the loan where, you've offered the loan to the borrower and then they say, hey, we're not going to do this deal. The easiest way to explain this is a right of rescission. So a borrower comes in and does everything, and then you get to closing, the borrower goes to closing, everybody's seemingly happy, and then the borrower calls you up a day or two later and says, we're going to rescind the transaction. My first response to that is, depending on how hard I've worked, I may want to scream for a little while, but it does happen. But when that occurs, that loan is not a denial. It's not closed for incompleteness, the whole bit. But they got approved, but they chose not to go. This is the category that they choose. And again, this is not something that happens a lot, but it is out there. Okay. All right. In addition to the geocoding for the subject property, the interest rate spreads, demographic, and high level loan data has to be reported. Okay. Regardless of the outcome, even if the loan is denied or, closed incomplete, you've got to still submit the demographic data that you have on a HMDA report. We see people say, well, I didn't close the loan, so I didn't get everything. Well, it doesn't matter. You got to submit what you have. Okay. Now, depending on the disposition of the loan, additional fields can be required that's outlining the underwriting type as well as the reasons for denial on that. Other information such as whether the loan was sold to a third party or retained for servicing by the lender also has to be there. Okay. Now, one thing I want to say about HMDA data, if you're utilizing your LOS platform like Encompass, for example, a lot of this is going to be pretty much automatic on that. They're going to work with you, but you've still got to submit it up through submit it up and get it directly into the NMLS system. Even if you are doing it yourself, you still got to submit on that up through their system. All right. We're talking about error reasons today, and like I said, what we're looking at is why you would have a problem with your HMDA submission. All right, first of all, the largest cause of errors in HMDA reporting are the type of disposition and the errors in the documentation. Okay, that's where it occurs. And remember, you're only allowed basically no more than 10% on your error rate. Well, if you only closed 100 loans inside a metropolitan area and you had errors on 11%, there you go. You have a problem. Now, some of the error reasons for the documentation is the loan's denied, but the disposition codes for denial reasons don't match the consumer state of denial. One of the things that we look at, we'll see on the HMDA report that the loan was denied due to excessive obligation, something like that. Okay. Then we look at what was sent to the consumer, and we see it was denied due to bad credit or something else. That's a mismatch. What you send to the consumer is what you have to report on HMDA. And you have multiple choices on both, but they have to match. If it was denied for excessive obligation to income, that's what it should be denied on the HMDA screens. So that's a very common error. And I will tell you, we see that one a lot. Okay. Another one is a loan withdrawn but no withdrawal letter from the consumer or certification. Now, I mentioned a while ago when a loan is withdrawn that deal is where the borrower comes in and says, I don't want to do this anymore. Okay. Well, in the past, the regulator's position was, okay, you've got to have a letter or an email in the file indicating to stop processing the loan. Well, somewhere along the line, somebody at the regulators wised up and realized, you may not always get that. Okay. And that was always a big complaint because, the borrower's called up, he's gotten aggravated over something. He says, hey, stop processing my loan. Click. Well, what do? He just withdrew the file, but you don't have anything. Well, we finally got some relief a few years ago. And it basically states that, obviously we would prefer to get a letter from the borrower, but there are deals that you can't. And when that occurs, you need to have something in the file showing that. They now accept a certification letter from either a loan officer or a processor that they spoke to the consumer and they said to stop processing the loan. That is acceptable. They have finally figured out that you can't always get that letter. So what happens is, if a borrower calls you up and says, hey, I'm done, I don't want to do this deal for whatever reason, ideally they'll send you an email, but sometimes that doesn't happen. But if the loan officer or the processor or whoever spoke to the consumer goes in there and says, on this date, I spoke to John, the borrower, and he told me to withdraw his file. Okay, that's acceptable. They will now accept that. It's a verbal certification is what it is. But you've got to have that in the file to basically back up the withdrawal. So that's a very common error. There's a loan withdrawn, but no withdrawal letter. Okay, so watch for that one in particular. Again, loans closed for incompleteness with inconsistent dates of closure. You take somebody and somebody you closed is incomplete after 30 days, and another one gets closed incomplete after 150 days. That's a problem because they're going to say, why did this borrower get longer than this other borrower? It runs into a fair lending issue. So one of the big things there I always say is pick something that works for you and your organization. And I've seen this happen where somebody basically disappears after about a week or two and you can't get them on the phone. You think, well, I'll just close them out for incompleteness. But your company policy is you don't close until day 60 on something like that. You want to hold that file there until you hear from the borrower again. And then at that point, it goes incomplete. And again, that's a lender initiated action. Again, not going to be anything in the file like the way you have on a withdrawn loan. You're just going to basically close the file out. And as long as that we see from a regulatory standpoint that as long as we see that incomplete was typically done, say it's at day 60. And again, this is a date that your company can choose. 60 days, 90 days, 120 days, whatever it happens to be, as long as we see that there are consistent dates of incompleteness. We took the application on January the 1st. The file went closed for incompleteness on April the 1st, after 90 days. And we see that going throughout your files. That's great. That's what we want to see. Because if you're not, then it gets to be, well, why are you giving this borrower this amount of time and this borrower this amount of time? That gets a little tricky sometimes. So again, incompleteness without or with inconsistent dates of closure. That's a problem. Another one that we have is incomplete or erroneous demographic information. This is where basically you don't fill anything out when you're supposed to, or it's incorrect. Now, one of the things I want to mention regarding this is your loan origination system, your software packages are typically going to have a HMDA screen where the data is filled in automatically. And if available, always use the HMDA screen. Now, what's going to happen in there is it's going to carry over things like income. It's going to carry over things like debt to income, loan to value, other things like that. However, there's a lot of demographic, can't hardly talk, information that's there that may or may not be carried over, but you want to make sure that you have it. Now, when we look at demographic information, one of the things that has come up, and this has been kind of interesting, depending on who your regulator is, and I don't have a good answer on this because, quite frankly, the regulators are so all over the board. Does everybody know when you must report demographic under all circumstances? If you are taking that loan application face to face, you must report demographic information. If you are taking the loan application, say by internet or by telephone, which is very common these days, you have to ask the consumer for the information and they can decide. But if that person is sitting down there with your loan officer, you have to supply it. Even if the borrower says they don't wish to supply, then it's going to be done by visual observation and surname observation. Okay? Now, again, there's 129 fields that are available on the HMDA screen. Most of them are going to be filled in automatically, kind of thing. Not all, but outside of the demographic, the major areas are institution ID. This is going to depend on your regulator, who your regulator is, the universal loan identifier, aka the NMLS number for a particular loan, the property address, geocode information, that's your census tract data, action date, action taken date, rate spread, type of loan, denial reasons, HOPA marker, and who the purchaser was, Fannie Mae, Freddie Mac, or a third-party investor. Okay, but these are going to be items that you're going to report on every single file. Now, again, looking at some demographic issues, boy, these are all over the board, and I have some bad news I want to give you here in just a moment. Now, if the loan is taken in a face-to-face application, you must include demographic data, whether by the customer providing it to you or by visual and surname observation. So, let's say that a borrower comes to you and you take a loan application face-to-face, okay? And the borrower says, I don't wish to supply that information. There is a blank on the form where you can indicate that the borrower did not wish to supply the information. Okay, but you did it in a face-to-face interview. You have to, by visual observation and or surname, complete the information. If the borrower comes in, you might say he is a white, male, non-Hispanic. Okay, that's fine. If the borrower comes in and it's a white male and his last name is Rodriguez, chances are pretty good they're Hispanic. So white male, Hispanic kind of thing. Now, the one thing I always say about this is if they don't wish to supply the information, then at that point, it's up to you to put the information in. However, you are not held accountable for an error. So, for example, if you indicate that Mr. Rodriguez is white, male, Hispanic, but you indicate him as white, male, non-Hispanic, it's not a problem. It's based on your observation. The law does allow for errors to occur. You know, one of the things sometimes that happens, we'll get somebody in and their last name may not be a Hispanic last name, okay? But they're clearly Hispanic. It's based on visual and surname observation. It's your best guess is the point. Now, we know that a lot of applications are not taken face-to-face today, okay? Now, in these cases, the interviewer must ask the borrower to supply the demographic information. There was a rather famous case involving Bank of America, I believe, where they were either not asking the application or not asking for the information from the borrower and just putting it in and not putting in either not putting the information in or just putting something in that was erroneous. Big trouble. Big trouble. So, anytime that you have that ongoing where there's not a face-to-face, so it's by telephone, maybe it's by internet, the interviewer must ask the borrower. So if your loan officer, and this is a loan officer training situation, takes a loan application, they need to ask, I have some demographic questions for you. These will not affect your loan decision, but I have to have this information for government reporting. Will you provide for me? By and large, a lot of people will. One of the things I always recommend is having a written script for your loan officers that they can follow when they're doing this by phone or by email, something like that, so you can get the demographic right. But the big thing here is you want to ask. The loan officer must ask for this information. If they don't ask for it, it's going to be a problem. And they do check for that. And like I mentioned, Bank of America a while ago had a huge fine not too long ago involving that very issue. Now, if the borrower does not wish to supply during the course of a face-to-face interview on this, then it must be noted that the borrower failed to supply the information. All right, now, this is a highly contentious area, okay? And the reason it has to do with is due to the Patriot Act. Because if you're following the Patriot Act, it indicates that they have to supply you with a photo ID. Now, depending on your regulator, they may indicate the information should be left off or use the photo ID to complete the demographic. I'll go ahead and tell you, we have been involved in regulatory responses where the regulator came back and said, you said the borrower didn't want to supply the information. Okay, but you've got a driver's license which clearly indicates that this person is a white male, non-Hispanic. Well, they didn't wish to supply that. Yes, but you know what it is because of because of the photo ID associated with the Patriot Act. This is an error. Go back and re-report. On the other hand, we've run into situations where we get just the opposite, where, well, the information will be reported and then they'll turn right around and say, why are you reporting this? They didn't want to do it. And you're not subject to the visual observation rules because of just because you have a photo ID. Now, I would love to give you a clear-cut answer on this, but the honest truth is I can't. Now, the most recent internal audit or HMDA audit that we were involved with some of the regulators, it happened to be a Federal Reserve Bank regulator, they came back and said, you don't supply anything if they don't supply it at all, even if you have the driver's license. That is their position. That's the last thing we have. But anytime we're called in to do a HMDA data scrub, that's one of the questions of how do you want to do this? Because presumably you know your regulator better than anybody else. So this is one of those things that can really run into a problem. Again, nobody really knows. How's that for a little bit of cold comfort? So even the government that can't decide what they want to do on this. And we have been told both ways. We've actually carried out multiple HMDA audits at the same time, where one set of regulators says you don't include it, and the other one says take it off the driver's license. Holy cow. You know, no wonder we're all confused. So the big thing there is if you call upon us at the Commonwealth Group, we're going to ask you, how do you regard this rule? Because we can't get any consistency on it. Presumably your regulator can supply some light on the subject. But the big thing with all of this is if it's face-to-face, it has to be provided. If it's not a face-to-face interview, then if they're choosing, whether they are choosing to or not to, you must ask the borrower. You must ask the borrower for this information, and they can decide. You can't just let it go. And one other thing I'll mention about demographic issues. I've run into this before with borrowers, and we'll say, what do you consider yourself? Well, the long and the short of it is you are what you say you are. So if you come in and you are clearly a white, non-Hispanic male, but you identify yourselves as a black female, black female Hispanic, you are what you say you are. We are not here to make a demographic determination in that regard. If they supply it and they give you the information, you are what you say you are. And we've had people argue with that. And they've said, well, it's obvious they're not what they're saying. Well, again, you are what you say you are, and you depend on the consumer or the borrower to tell you that information. Like I said, demographic issues are a very contentious thing. Next, error checking. All right, most LOS systems are going to have the capacity to error check at the loan level. Always, always, always use it. Always use it. You want that system to check. You can even do batch checks and all kinds of stuff depending on what your LOS platform is. Best practice is to run a batch error check with LOS or a third-party software for the previous quarter. This allows the errors to be found prior to the submission of the HMDA data. Because remember, once you put it out there, you can't get it back. Cannot get it back. But again, you want to run a batch error check. That's always a good idea. If you're submitting manually, which you still can do, utilize the rate spread tool at CFPB. That's one of the harder things to do if you're doing it manually. And then census tract information is available at FFIEC on the GeoMap. Now, if your LOS system has a built-in geocoder, again, highly recommend that you use it. Highly recommend, because if you're actually going out there and looking up information at the FFIEC website, it's time consuming. It's very time consuming. But if you're running a system like Encompass, chances are pretty good you have some integrated tool that will do that for you. So I know that Encompass will have it, maybe Calyx, some others like that. But if it's available, you really want to take advantage of that. All right. Important final information. I'm trying to wrap this up here. I'm not sure how we're doing on time. Now, the big thing here, only files which have been triggered must be reported. If you have a file that maybe was a prequal, but you don't have a property, it never materialized to that point. As far as HMDA is concerned, that is not a reportable event. You have to have all 6 items. So that's the first thing. Again, number on that, it's only if you have the 6 items. Now, there are certain requirements for Reg B that have to be followed on all files, but HMDA is only reported on files which are actually triggered. Okay. Now, the institution which makes the credit decision is the institution that reports the HMDA data on a particular file. Now, one thing here, we get a lot of people who say, well, I don't make credit decisions. My investor I send my loan off to my investor and they approve the loan. Yes or no? Okay. That loan for you is exempt from reporting because you did not render the credit decision. Who renders the credit decision is who makes the filing. Simple as that. Now, if you are a delegated correspondent, maybe you're selling the loan to an investor, but you're making the credit decision, or you're utilizing a contract underwriter such as the Commonwealth Group, you are delegated, it's your loan, but you or one of your proxies is making the decision for you. That goes on your HMDA report, most definitely. All right. Now, most LOS systems can exclude a file from being part of the submission. We see this a lot. Somebody takes an application, they send it off to their investor, the investor renders a decision. Maybe they make the loan, maybe they don't. They can say click, and that takes that loan out of the HMDA submission report. Okay. Now, again, failure to report or accurately report can have severe consequences. Again, this is why we always recommend having a spot audit prior to submission, because the errors and they can be so quick, and it doesn't take a lot. It can have severe consequences. This is one of the few times that the government really takes it serious. Okay. And finally, the key to accurate HMDA reporting is having a strong compliance management system. If somebody's on the call today and you don't have written policies, procedures, or an internal audit plan, you can contact us here, contact Martin, contact Curtis, and we'll work with you on that, because you've got to have a strong CMS. And this is whether you are fully delegated, or you are selling to Fannie Freddie, or you're sending to an investor. Written policies, written procedures, internal audit. That is a complete compliance management system. And one of the things I say about a CMS is it's not just nice to have, it's the law. You've got to have it. So if you don't have that, then reach out to Martin and we'll make arrangements to get one to you. Okay. But that is often the best start for getting accurate HMDA information, is to have clear written procedures. And there's some of our group shot. Do we have any questions? I don't know. Martin, how are we doing on time? I didn't even look. I didn't have my
We're doing
watch
pretty
out in front of
good.
me.
And Wes, that was awesome. We're right at 47 minutes now. We have one question come in if you want to take it. Otherwise, we can
Sure.
answer it offline. Okay, this one's from Penny. She goes, is there a difference in what fields have to be reported based on whether you're a small or large institution? And if so, what determines a small institution versus large?
Okay. Yes, there are some differences. For a small institution, and you're going to put me on the spot here because I can't roll those off the top of my head. Sorry.
That's
But
okay.
yes, that's one of those questions where I'm, oh God, I can't remember what it is.
So
But
Penny gets the prize this
Penny, you
webinar, I
get the
guess.
prize for the Stump the Chump prize today.
We can follow up via email if you
Yeah,
want to
we
do
can
that.
follow up, but the answer to that is yes. We do get this question occasionally. Oh God, I want to say it's less. I believe it's less than 100. I believe that's what it is. Don't hold me to that number, but there are certain things you don't have to report. I think it's the spread and some other things like that. There's a few minor fields. If you've been reporting it, it won't hurt you. It's just not required on that. Uh, there's, to be honest with you, most of the people that we talk to, there are small institutions that are out there that you don't have to report. And like I said, that's always nice if you have that. But you are more than welcome to that. Martin, if you'll get Penny's email, I'll look that up for him. We'll return that by email. I'm drawing all of a sudden I'm drawing a blank. Oops.
That's okay.
drawing a
Yeah, I have
blank
Penny's email
on
here.
that today. Are there any other questions on this?
Yeah,
Or
there's one more. Kat typed in here for loan approved but not accepted,
Mhm.
borrower initiated action. Um, does this have to be CTC or is it for conditionally approved as well?
Oh, that's a great question. I'll go ahead and tell you our position is that is a loan that is approved and ready to close. Okay. There's a lot of back and forth on that particular one. Uh, I always say the best example of approved not accepted is a loan that is maybe sent to closing and maybe a refinance and the borrower decided to rescind. That is obviously an approved not accepted. They chose not to do it. If the loan has outstanding conditions and the borrower, for example, I'm trying to think of something all of a sudden. Uh, uh, you needed additional, maybe you needed tax returns for some reason, and the borrower says, I'm not supplying that. Okay, well, at that point, the borrower can say either reject my loan for, it's a rejection for uh, either failure to supply information, or you can say, the borrower can come in and say, look, I'm not doing that, stop it. That's a withdrawn at that point. So it's a little bit of a leeway type of situation, although I will say this. The main thing is to be consistent. I've always taken the position that approved not accepted only occurs after the loan has been fully credit decisioned. If there are outstanding items that they have either not supplied or they're unwilling to supply, that's either a withdrawn, denied, or closed incomplete if they've stopped communicating, kind of thing. I don't think, to me, approved not accepted is only after the loan's actually approved and like ready to go to closing. The best example again being a rescission on a refinance. All right.
Awesome.
Anything else?
There are a couple more coming in here, but we're kind of getting close to the end here, Wes. But Sarah, I see yours. Tina, I see yours. Kat, I see yours. I'll write all of these down, and we will get you answers via email if that's okay. If you guys want to type in email addresses just to make sure I have them, that would be great, and we'll get right to you.
And we'll be happy to answer these by email. One thing I will throw in here, just a little, I guess, here's my commercial at the end. If you are subject to HMDA reporting, we are already scheduling HMDA audit reviews right now, because once we hit January 1st, we're doing a lot of these. So if you would like to have one or would like to have us look at one, uh, please let us know as soon as possible. We'll get some information from you and we'll write you a proposal. Um, this is the time to do it. Remember, once that loan application register goes in, you can't bring it back. But like I said, your deadline is March 1st. So this time of year, we tell people flat out, get the requests in now so we can get you scheduled on that, because this is something you want to do in January and February. We had an unfortunate situation a few years ago. Curtis, I think you may want to jump in here, but it was right around the 25th of February. They were panicking. They knew they had problems. Long story short, we're like, okay, we'll see if we can squeeze you in. How many files do you have? Kind of thing. 5,000. Holy smoke. I don't think we're going to make March 1st, but we did work with them and they were a little bit late on their submission, but they did get it in pretty quickly. And again, they did not get penalized, but it's better to be slightly late than it is to submit erroneous data. It's much better to do that. But again, that's not the way we want to do things. We want to get the files in on time, kind of thing. So if you think that that's something that your organization might be interested in, reach out to Martin and we'll be happy to get you a proposal on it, because it's coming fast, folks. We got Christmas and New Year's and bang, it's HMDA time. So it's here, it's upon us. So, all right, well, if you have any other questions, don't hesitate to reach out. You can drop the questions to Martin. Martin, what email address if they want to send to? Is it the info? Which
Yeah,
email address?
either one. So info at thecommonwealth.net or mluplow, MLUPLOW at thecommonwealth.net.
Okay.
But
Either one.
yeah, either one of those. And I see a question here, Stacy. Yeah, we're going to send a copy of the presentation and a recording out to everybody. So when we do that, you'll get my email address as well.
All right, everyone. Thanks for your time today. Hope everybody stays warm. It's kind of cold in Tennessee, and it's supposed to snow. So let me go get my mittens out. So anyway, have a great afternoon, everybody. Take care.